Hi everyone, welcome back to our channel. Adi here. So today we are going to discuss on the taxation of on our mutual fund. So how much will be taxed depending on the period we hold the mutual fund and the capital gain. So let's the video get started. Okay, so basically you will be taxed depending on the mutual fund type. So if you see for equity funds and hybrid equity funds, so if you hold it for less than 12 months and redeem it within 12 months, then you will be eligible for short-term capital gain tax. So your profit or gain will become under STCG. For long-term capital gain, if you hold it for more than 1 year and then you redeem it, then you will be eligible for LTCG. So similarly for debt fund and hybrid debt fund, so if you hold it for less than 3 years, 36 months and you redeem it within that, then you will be eligible for the STCG, whatever gain you have. And for if you hold it for more than 3 years and then redeem it, then it will be under LTCG. So let's see how taxation on equity funds. So let's say it will be you redeem it within 1 year. Okay, so that means you will be charged 15% of your tax irrespective of your income bracket. So it doesn't fall under any income bracket. Let's say you are less than 5 lakhs your income, then you don't have to pay any tax and all those things. Bracket it will not come. It will be flat 15% plus your CSS and surcharge. For long-term capital gain, if you see, if your capital gain in a year is within 1 lakh, then you will not have to pay any tax. But if your capital gain or profit is more than 1 lakh, then you have to give 10% tax and there will be no benefits of indexation. So basically indexation in debt fund you will get the benefits of indexation, but in equity you will not get, plus your CSS and surcharge you have to pay. So in case of debt fund, so short-term capital gain, so if you redeem it within 3 years, then the capital gain will be added to your taxable income. So whatever is your income, it will be added to that, and then it will come, the tax will be as per your income slab rate. But for long-term tax, if you redeem it after 3 years, then it will be flat 20%, but the benefit is here indexation will be applied. So 20% flat plus CSS and surcharge. So this is how your equity and debt fund taxation happen. Similarly, if hybrid equity, then it will be same as equity, and hybrid debt, then it will be same as your hybrid debt fund. So let's understand what happens if you invested through SIP. Okay, so basically in SIP it works like fast in fast out basis. So let's understand. Let's say you are start your SIP 16 August 2022 and you invested till 16 August September 2023 and you redeem it, let's say on 17th September. So that means your first SIP start date will be 16th August and your end date, redeem date is 17th September. So that means around 13 months. So will come under LTCG, long term capital gain. So if your capital gain is not more than 1 lakh, then you don't have to pay any tax. But you can see there is a star. That means if you are gaining you have capital gain on the second month onward on your SIP on the unit you have purchased, that will be come under short term capital gain. So that you have to pay the short term capital gain tax as a flat rate. So that is why I put a star there. So I hope this is how you are very much understand how taxation work. So I'll show you an example, live example using Kuvera. So how you can calculate before redeeming and switching your mutual fund. So will be aware how much you have to pay the tax or your exit load and all those things. So let's go to Kuvera. Okay, so now I have logged into my Kuvera account. So if you go to Kuvera, you can see there is a feature. You can see there is a Trade Smart. So if you go to Trade Smart, you can see here. So Trade Smart active for you. So what you want to do? Let's say I want to redeem something. Okay, so if I click on redeem, then you have to select your fund. So let's say I will select ICICI Prudential Blue Chip. Okay, so here all you have to provide, let's say your folio number is this one, and your value is this much, your current value, and this is your unit. So you can manually enter how much money you want to redeem or how much unit you want to redeem. So let's say I want to redeem all. Okay, so then what we have to do, select yes. So here you can see, it's good thing that it can, so you can see here, so 162 rupees is my short term capital gain, and 136 will be under my LTCG, long term capital gain, and your exit load, my exit load will be 61 rupees. So from here you can calculate how much you will be getting on the return and how much tax you will be you have to pay as part of STCG or LTCG. So this one also you can check it out. So let's say I will go back and I'll say, let's say I want to switch my fund instead of redeem. So in that case, let's say I want to switch ICICI Prudential, and I can select another fund ICICI. Let's say I select this one. So let's select all units. So you can see here the same, it will show once you switch or redeem, it will show how much you have to exit load and short term from capital gain, long term capital gain you have to pay. So this one you can check in Kuvera, so it will be easy for you instead of complex doing the complex calculation. So I hope this video is helpful for you, so you can calculate your own mutual fund taxation before redeeming or switching. So if this video is helpful to you, please hit the like button and subscribe to the channel. Thank you everyone.